A very happy evening for each one of you. Wishing a very happy Christmas as well as a happy New Year. I am sure that in all our offices already celebrations would have started. Even at our office, the celebrations have already started and we are planning for a grand celebration tomorrow. Having said that, I think by this time, everybody, all our clients as well as Incorp's clients are aware that Incorp and Vakilsearch have entered into strategic partnership recently. And together, we have already hosted some 3 to 4 webinars on various topics relating to income tax, GST, investment, debt, equity, and so many other topics as well. And this series will continue to flow as it is. Now, with Incorp and then Vakilsearch coming together, our subject matter, our technology, our processes, everything have become even more stronger and we are ready to support the entrepreneurs even more better. Earlier, Vakilsearch used to support a small scale company, a company with 80 to 100 crores of turnover. But Incorp used to work with companies which are having 300 crore, 400 crore turnover or more than that. But together, as we come across, as we came together now, we are able to support a small scale company which is incorporated just now, as well as a listed company which is already having lakhs and crores of customers too. So these are our strengths at present. So I would like to introduce all the hosts which are going to host this particular meeting today and all the speakers for this meeting. So myself, I am Sri Harsha. I work with Vakilsearch. I'm a chartered accountant and I take care of the accounting and taxation team over here. I come with an experience of 8+ years and my core expertise is into GST and income tax. And along with us, we have Mr. Meet. He's also a chartered accountant and he's also a fellow member of Institute of Chartered Accountants of India. In fact, he holds a degree in international taxation too from the Institute of Chartered Accountants of India. He comes with an experience of more than 10 years. He worked on various assignments. He worked with income tax department closely in various, in representing the clients for their assessments and other things. And his main expertise is in direct tax, including the litigation in direct tax, which is usually a complex area. And we also have Mr. Margo along with us. He's also a chartered accountant. He also holds a degree in international taxation. And Margo also comes with an experience of more than 10 years in this particular field. He also advised the clients on international taxation, transfer pricing, and corporate tax compliance. And he also handled litigation and even represented the clients before the Income Tax Appellate Tribunal. So these are the profiles with which Mr. Meet and then Margo have come together. I would like to welcome both of them. Welcome, Mr. Meet, and welcome, Mr. Margo.
Thank you, Harsh.
So
thank you, Harsha, for the background.
Thank you. So already I think everybody is aware of the topic now. The buzz going around in this particular domain is about income tax returns, because due date of income tax returns has been extended multiple times this year. And finally, the final due date even from the government's end, which is decided is 31st December for the people who are not subjected to audit and February 15th for the people who are subjected to audit. In simple terms, if I need to say, for all individuals who are receiving the salary, due date is going to be 31st of December. And for the people who are running the private limited companies or for the people who are coming into the tax audit limit of that 5 crore, 10 crore turnover and all, they will be filing their due date before February 15th. And everybody is aware, almost every newspaper has covered this issue that there is a new portal which is launched for income tax. And that portal was having, at least I can say, was having so many issues. Initially, both professionals and even the taxpayers have complained a lot about that portal. Infosys and government had worked together along with our Institute of Chartered Accountants of India. They took a lot of feedback from all the professionals. And in a way, we should say the portal is almost up to 80 to 90% mark today. In fact, I can ask Mr. Margo to throw us some light on the data on where we stand with respect to the income tax, number of income tax returns filed today, etc. But having said that, I would like to repeat the due date once again. 31st December, which is just 7 days more from today. 31st December is the due date for filing the income tax return if you are a normal salaried employee or if you are running a small business. February 15th of 2022 will be the due date for you. If you are running a company which is coming into the tax audit limit, either a private limited company or even a small business which is coming into the tax audit limit. Again, tax audit limit, it has a detailed discussion. Maybe we will take it up during this webinar. So if you are applicable for the tax audit, then at the time the due date will be February 15th. Otherwise, remember your due date is December 31st. Now, like I would like to ask Mr. Meet, like don't think that I am starting on a negative note, but say as if we like miss this due date, if we miss this December 31st due date, what will be the consequence?
So up to March, you can file your belated return. It is told a delayed return is a belated return. Technically, you can file your returns along with a small penalty. The penalty is depending upon the income that a person earns. So up to 5 lakh, it is around 1,000, and above that, it is 10,000.
Will there be any interest as well?
Yeah, so tax interest is separate from this default in filing the return. So tax interest is the meter is on from your advance tax missing due dates and all. From 31st March onwards, the tax interest rates are ongoing to every taxpayer.
Yeah, agreed. So you mean to say that both interest as well as the penalty will also be applicable. The penalty will be up to 5,000 to 10,000 rupees, but whereas the interest is normal 18% charge and 234A, BC and all will be applicable. So ideally, it is not good to skip the income tax return because even still 7 more days are there. So for that particular reason, I don't think there is any reason why we need to skip it. But if in case, if you are missing this deadline, so please remember, you need to pay the penalties and then file this income tax return. Mr. Margav, so can you throw us the light upon how many returns are completed so far and what do you expect in the next 7 days? Is there a chance of extension? Because I think this has become a usual practice for all of extension with the government. Can we ask at this time too? And what do you think the government will decide on that matter?
Yeah, so as far as the due date is concerned, as you have already pointed out that it is just 7 days which are left for the due date. And basis the last numbers that were released by the Income Tax Department, as on 20th of December, a total of 4 crore returns have been filed. And if you see majorly the ITR 1, ITR 2, and ITR 3, which is regularly used by common people, individuals per se, there if we see the number has crossed around 3 crores. So usually we see around 7 to 8 crores returns being filed. And as against that, we have just 7 days left for the due date and the number is only around 4 crores. So 4 crores, as it may seem that, okay, 4 crores people have filed 4 crores people have filed the return. But the number of people filing return in India is very less as compared to the total population of 130, 140 crores that we have. So in the number sense, 3 crore may seem, 4 crore may seem big. But in terms of the total number of people who are usually complying, this is a small number. So considering what I feel is that somewhere the extension might come at the end of the due date, nearing the due date.
Agreed, Mr. Margav. So the numbers which absolute numbers might look very big, but when we compare it with the total population, yes, you are absolutely right. We are just 3 to 4% of us are complying with the income tax provisions, or like 3 to 4% of us are filing income tax returns. And in fact, like Meet was discussing with me before this meeting, he was also mentioning that last year, the total number of income tax returns filed in India were around 7.38 to 8 crores. So this time we are at 4 crores, which is almost 50-60% we have completed. So still there. But anyway, for many of them, the due date will be February 15th. So before I proceed for the next question, I would also request audience attending over here, please pose your questions on the chat box. I will take up that question and I'll request our speakers to answer those questions. Now, Yogeshri has asked a question. Does the due date differ for the private limited company and OPC? Mr. Meet, can you throw some light on that?
It's the same due date. For a private limited company and an OPC, the due dates are same.
Yeah, so for private limited company and OPC, due date is same, and it will be February 15th. However,
for filing the ITR.
Correct, for filing the ITR. However, Yogeshwari, I would like to say one thing. See, the due date which we are discussing in this webinar is purely for income tax due date alone. But there will be your corporate compliances due date, your annual return due dates will be there. They are different, and most of those due dates are ended by November 30th. But however, once the AGM is ended by November 30th, you'll have 30 more days to file the MCT 7 endeavors report. So I would like to highlight that the due dates which we are discussing here are purely for income tax, but there are other compliances under Companies Act for which due dates are beyond the scope of this webinar. So that's the reason we are not touching about it.
Even tax audit due dates are different from the income tax filing due date. Tax audit due date, transfer pricing report uploading due dates are 1 month prior to the due date of actual due dates.
1 month prior to the actual due dates. So you mean to say that tax audit due date will be, I can say January
15th Jan.
15th
Yes,
Jan.
For a person who is liable to file its return on 15th Feb.
15th of Feb. Okay, got it. That's a good point. And I was also seeing actually, in the Twitter and everywhere, AIS and TIS are the two words which are trending. People are saying government started utilizing artificial intelligence. People are saying government started accumulating the data from many places. People are saying my privacy has been violated because of this. First, I would like to understand, like, what is this statement all about, and how is it different between the? I mean, how is it different now when compared to the previous days? Mr. Margav, if you can take up the question, it will be helpful for us.
Yeah, so as this government has been putting right along from 2014 when it has come into the power, it has always pitched for transparency. And one of the major changes, as you have rightly pointed out, earlier also we used to have Form 26AS. Form 26AS, I would just like to tell you, was nothing but a summary of any tax deducted by anybody was reflecting there. And few property transactions used to come in the Form 26AS earlier. And basis that you had to file the return. And AIS, Annual Information Statement, it is nothing but those statements earlier used to be only available with the assessing officer. And they used to conduct the assessment basis entire information, entire gamut of information which the department had. Basis those information, they used to conduct the assessment. But now this has been a complete overhaul, complete change. They are giving you this annual information statement right at the beginning. They are saying that these are the types of information. These are the detailed information which I have about you, about an individual assessee. And you can go through those information, go through those details of income, expense, your property transactions, your mutual fund transactions, your refunds that has been received, and the entire gamut of information, it is given to you. And then you are being asked that you comply, you confirm these details, and accordingly you file the return of income. So these information never used to be earlier available with the taxpayer at the time of filing of return. It might very well sometimes would happen that if a transaction has happened, say at the start of the year in the April or May, and when you file the return, you are in the next year, July, August, where the due dates are there. So you might have very well missed a transaction done at the start of the year, and you might not recollect, and by mistake also, if you miss out, and since it is not there anywhere reflected, it might miss it. You might miss while filing the return. But with AIS, you have all those data, and you can definitely go through them at the time of filing of return. It acts as a checklist for you that you don't miss any types of income. So as far as the privacy is concerned, I don't think it is very big of an issue. I think it's very essential that, see, the transactions are being done through banking channels. The transactions are being done through government entities or the people who are responsible, like registrar and all those places. So they are supposed to file compliances with the government. And that's why these information get passed on to the government. And they have a database which is being used. And the data is entirely presented to you in a simplest of the form so that you can consider while you file the return.
Understood.
With anything you would like to add on this?
One thing that I would like to add is that if any information is missed by mistake added to your AIS, basically the assessee or the taxpayer can do the research, can coordinate with those authorities which have uploaded the data, and they can ask for a reconciliation or a revision in the data, or can keep an explanation for the same ready at this moment, which they used to do earlier at the end of the assessment term and all. So that one thing helps more for transparency point of view.
Got it. So you mean to say that Earlier, we used to go and disclose that this is my income. Now, department is saying this is your income. You mandatorily go and disclose it. So, in a way, like I think so much of information is being populated in AIS. And means what you said is also definitely right, because sometimes since this is a new technology, certain wrong things are also being populated, or some other assessee information is also being populated in my portal. So we need not get panic immediately. We can like see whether it is my transaction or not. If it is not, we need not consider it. That is true. And is there any difference between the earlier 26 AS? We used to call a form 26 AS, right? Is there any difference between 26 AS and this AIS? Margo, you can take up this question. Is there any difference between 26 AIS and the AIS currently?
So these are the additional set of information which you would, when you would log into the portal, you can get it in the compliance tab. This all the information is auto-populated, which is actually collected on your PAN. So when you log in through your PAN, all the information pertaining to the PAN will be reflected in the compliance portal. So there we'll be able to see all those transactions. Then it has data. Say for instance, you have invested in say 10 mutual funds. So all those data will be there. Or you have done transactions in the property. All those transactions will be there. Form 26AS has also been enhanced basically. If you see what was Form 26AS initially and what Form 26AS details are given currently, it has undergone a massive change. Like you don't only get details of TDS and TCS, which earlier used to happen, but you also have details pertaining to the property transactions. You have details pertaining to the GST returns that you have filed, entire turnover, everything gets reflected in the Form 26AS. So Form 26AS itself has been, the scope has been enlarged. And you can see there also lot many details which earlier not used to be there.
Got it, Mr. Margo. So day by day, things are becoming like, more and more strict is what I can say. The reason is government is accumulating the information from every place. Thanks to technology and things like big data and artificial intelligence, it is able to accumulate information from stockbrokers. It is able to accumulate information from registrar offices. It is able to accumulate information from gold shops. It is able to accumulate the information from car showrooms. It is able to accumulate the information from that SFT statement, specified financial transaction.
Exactly.
So in a way, any transaction, I can safely say that which goes beyond a particular limit, say 10 lakhs, is definitely there under the purview of Income Tax Department. They are watching the transaction and they know what transaction is happening over there. So
basically, I would just like to add there, you rightly pointed out, just one more point, that everything is being served on a platter to you, that this is all that you've done in a particular year.
Correct.
Now,
Correct.
When you file your return, you ensure that you're considering everything that has been there.
Yeah, that is true. Even in fact, in my case, I had one bank account which was very old, and there was small amount of balance left in that bank account, which was adding up. I mean, the bank was adding up some interest on the top of it. For the past 4.5 years, I have never opened that bank account. I don't even know where the bank account is. But today, because of AIS, they populated, okay, Sriharsha, you have 4 bank accounts, and 4 bank accounts have credited this much amount of interest into your bank. So that is when I realized, okay, this is also one bank account there for me, and then there is some balance lying out there. So it's all like, I mean, not coming from my side, it is coming from the department side now, which is like very, sometimes it is good. Sometimes it is like, I think we feel that a lot of things are there with the department. We cannot easily escape now. So
it's like they know more about us rather than we knowing more about us.
This statement is absolutely true. This statement is absolutely true. We don't know anything about us, but they know a lot about us. Yeah. Margo, moving forward, this crypto is also becoming very popular, right? I mean, there is a data which says that 8% of Indians have already invested in crypto, which 8% is almost 6 to 7 crore people have already invested in the cryptocurrencies. So what about their tax implications? So should I need to pay income tax on crypto? Can I use the crypto for escaping the income tax in the country? Meet, you can take up this question.
Oh, so crypto bill is due in Parliament, a very litigative topic, whether crypto is a legal currency or no, whether people can trade in crypto, whether wallets can be allowed to be continue to be used for crypto buy and sell purposes. Very, very debatable topic. But our personal opinion matters end of the day now on such topics. So Crypto trading, of course, it has to be shown. If there is an income, it has to be offered to tax. If there is a loss, you can claim the loss. But again, litigation persists on such topics. If it is a frequent transaction, there are Supreme Court judgments about trading and capital gain classification. So if it is a frequent transaction, you can offer the same under your business income or loss. If it is a investment vehicle or an investment category, currency trading that you are trying to do, then it can be offered in capital gains. As of now, the safe answer would be to offer the same under IFOS, because there is a bit of technical arguments that an expert may use in showing cryptocurrency in your computation of income.
Understood. So for now, you mean to say we have to show the income, but claiming the loss is again depending on the judgment. Claiming the loss may be like it might be allowed in the future or it might not be allowed in the future is what I mean. Like even if we claim it today, it might land up into litigation is what you mean to say, right? Yes, Meet, agreed over there.
I think Margo, in this case, me and Margo will also have a difference of opinion.
Exactly.
Okay.
Exactly. I was just coming on to that. Because see, first of all, the tender of currency itself, whether it's legal or not, is something that we are going to get to know the government's view on this, because there has been a huge debate over whether a cryptocurrency exists or not. Whether there is an underlying to it or not is something which is being questioned by a large number of people. So now this is a form of investment which people are making. Just like we have BSE, NSE, people are dealing in stock markets, people are also dealing in the cryptocurrency, thanks to Ranveer Kapoor and 2-3 more stars who are just endorsing it, stating that, okay, it's crypto. But the thing is, in my view, it might be treated as a capital asset. And the income, the difference might be taxed under the capital gains head. But then taxation of cryptocurrency is something we'll see the day of the light of the day, maybe 2 years down the line, because still people are trying to figure out what is crypto. Let's figure out taxation of that maybe a year or two later. We might be doing some webinars, some presentation on crypto taxation after 2 years, wherein people will be asked questions about where did you invest and what was the gains and how did you offer it. So certainly, two people cannot agree on this, and I have already disagreed to the head of income. But yeah, chargeability is not in question. It will definitely be brought to tax as your income. Since you are earning, there will be a gain or a loss. So definitely the chargeability is there. Now, whether it will go under the income from other sources head or income from capital gains is something that we can continue to have different views, and then we leave on to judiciary to decide the right course.
Yeah. So yeah, agreed, Margo. And you were also in between, like saying about crypto as alternate investment option to the stocks, right? I mean, many people are considering it as an alternative for stocks. So I think in most of our clients, what we observed is people actually switch between stocks, especially in the last year when the market was at its peak. During that point of time, many people switched from one mutual fund, which already given enough amount of return, from that mutual fund to another mutual fund. And usually, I mean, as a common man, we tend to assume that I just switch the investment from one place to another place. I don't need to offer anything to tax. So, Meet, what do you say? I mean, like, is there anything which I need to offer to tax whenever I'm switching the mutual funds or switching between the shares, etc.?
Yeah, so switching and switch out is a very interesting topic. There are several judgments on it, and it is a settled position that switching and switching out of the mutual funds is required to be reflected in your computation of income. It has to be offered to tax even if there are no gains or losses, because sometimes we used to see dividend related ones where you already offer dividend amount as your income. The reinvestment amount is the dividend is again reinvested back to mutual funds. Those switch in, switch out positions, there was no capital gains arising actually, but disclosure is required in your capital gains statement of your computation of income.
Understood. So switching will be treated as a taxable event. So we need to definitely offer it for a tax, even though I invest the entire money. That is what you want to say. Yeah.
So what actually happens in this case, if I may just simply put in, you have invested say 25,000 rupees in a mutual fund, say for example, I'll just name one, Axis Mutual Fund, you are investing 25,000. Now, one of your friend, like 2-3 years passes away and one of your friend tells you that, okay, this is the new mutual fund that has come in and it has delivered say 20-25% returns, and one always feels that the mutual fund in which he has invested is not giving the returns desired, and other person's mutual funds are giving large number of returns. So after 3 years, what I do is I just pull out 25,000 and I invest. So my value of Axis mutual fund has increased from 25,000 to say 35,000 in 3 years. So now after 3 years, what I do is my friend comes and tells me that don't invest in Axis. I think my SBI is giving 25% returns. So I switch from Axis to SBI. Now what I feel is I have taken out 35,000 and I have invested 35,000 in another mutual fund. There is no tax. But if you see, you had invested only 25 and you are taking out 35. Though you expected 45, which never happened. Unfortunately, which never happened. So you take out 35. So the difference between 25,000 and 35,000 is the gain that you want. And you're supposed to pay capital gains tax on that. Whether short term, long term, it's a separate story. But whenever you switch out is nothing but a sale because you have sold it to somebody. Now that sale attracts capital gains. So you need to pay tax when you switch out. Even though you have made an investment in another mutual fund, but you have earned a gain of 10,000 rupees, that's where you have to pay tax.
And also there is no credit into your bank account at that point.
That's the most important part. Since you never get money because you just switch from one mutual fund to another. Your broker would be doing that for you. You don't even get a credit in your bank account. You feel that the money was invested earlier. Money is still invested. You did not earn anything, but no. Earlier, your 25,000 rupees was earning for you. Now your 35,000 rupees is earning for you. So the difference between 25 and 35 is your income, which is supposed to be offered, which is missed most of the time, because when you get your returns filed, you give your bank statements. No credit is reflected, but thanks to income tax department, thanks to the onerous liability which income tax department has now given to the brokers and all, they will be filing an additional return wherein your gains will start popping up in the form 26S. In the compliance statement, now your even gains will start popping up. So these incomes, small incomes which were being missed out, come next year, your capital gains would be computed. We just hope that those details are properly filled out so that we have a less difficult time while filing the returns, but that's what we can hope. But it will certainly form part of your Form 26AS. And you will not miss it from next year. But this year, when you file the return, if in 2021 you have switched over, make sure you offer that. Because income tax department certainly has an information of that switch in and switch out.
That's reflected in AIS. AIS will reflect the switch in, switch out position. The sale proceeds, they will reflect.
Yeah.
Got it. So there is no way in which we can miss it now. I mean, we should definitely disclose it now. And your example made it very clear. The 25,000-35,000 example has made it very clear too.
And the switch, and Harsha, on a lighter note, switch always happens because one of my friends tells me that he's earning more in the another mutual fund.
True. Grass is always greener on the other side.
Grass is always greener. Agreed.
Yeah. And Margav, my next question is on the new income tax portal, because government is advertising it a lot, right? You can file your returns on your own, or like they are saying it has become more and more simple. What's the truth, or what's your opinion on that? Has it become more and more simple? Now, should we say that complying with the income tax has become very, very easy when compared to the past, or is it same, or has it become worse?
So if you see, one of the biggest difference which I have experienced for the past like 3-4 months, where the website is still evolving and it is being coming up as a website which can sustain. So a couple of things which I have observed is various things they have tried to put it in the system itself. Like it's like a Google form that you're filling. They have made income tax returns. ITR 1 and ITR 4 always used to be those cases, even in the past website. 1 and 4 you could fill it, just like you're filling a Google form. But this website has introduced wherein you can even fill ITR 2, ITR 3. So this is one big difference which they have gotten. Secondly, if I would say, here we are addressing an audience which are majorly into individual compliances. But since we had a question about the company as well, I would just like to throw light on that part as well. There are various forms which we used to upload in a particular format earlier. So we just used to generate it through system. We used to generate an XML file which was getting uploaded on the portal. But now what has happened is they have made that form also online. So I just need to answer those questions after logging into the portal. I just need to answer the questions, and as I have answered those questions, it gets captured and it gets filed. So this is a big change as compared to the earlier part where I used to use the Java utility, which used to give me an XML file. I used to upload that. So those processes have been cut out. And I am just required to go and answer the questions, the forms which are already there. I just need to go fill those details and enter it. And that's how they are accepting the forms. So the online forms is one of the things which they have made simple. This is the major change that they have given in the new website.
Got it. In a way, the things are becoming a little more easier when compared to the past. Maybe, they may not have achieved their goal now, but at least they are in their journey of achieving it.
Certainly. So much of a data, even they are giving it pre-filled. Like, for instance, if a form 16, a salary, if the TDS is deducted in the 192, your entire form 16 becomes part of ITR 1. Not only with the income part, earlier that is to happen that it was only income. All the allowances, all the exemptions, you had to file yourself. But that has been done away with. You not only get your gross income, you also get all the allowances which your employer has allowed. Even that is auto-populated. So your entire form 16, you can see in your ITR 1 if you go through online filing of through portal. That is happening. So it has, that way they are trying to make it more simple.
Yeah, they are making our job even more simple. That's true. That agreed.
The compliance with the company is a big concern, but that maybe Infosys will help us.
Yeah, hopefully.
With respect to the other forms, we are facing some tough time, but we'll hope that with time, even that eases out and compliance becomes a happy job.
Yeah. Mostly, I hope it should be. Tax paying at least never been the happiest thing, but at least complying with the tax should become easy.
Should not be a task. Yeah.
Yeah. In fact, like I was discussing with one of our clients yesterday. She's an employee who receives approx more than 60-70 lakhs of income. So she was calculating her average tax percentage. Average tax percentage was coming to somewhere around 34% in income tax. And she was also saying me, like, for everything, whatever I buy, they name it as a luxury item and they're again charging 12 to 18% GST. In a way, I'm paying 34 plus 18% for living in India, which is 50%. Same a methodology by which I'll step out of the country and then stay. So that's how people are feeling. But at least, though the tax rate is not reduced, complying with the tax should be made easy. You're right over there, Meet, having said this, since you're already saying there is so much of information which is there already with the department. Now, if I miss even a small bit of it, there is a high chance of receiving the notice. Can you throw us some light on what notices or how do we approach once the notice comes? What should I do immediately? As a common man, what should I do once the notice is received?
So there are different types of notices: regular assessment and reopening cases. So reopenings are always due to some or the other issues which have arisen just now, or the information is available to the department recently. That is the reason why they need to reopen it, and not within the particular time limits that are already set. The ones that they are already addressed or are addressed during the regular time limits are the one which we can curtail through this transparent AIS and 26AS reconciliations that a taxpayer does. So must to reconcile every statement with AIS. If it does not persist to you, you may talk to the concerned mutual fund share statement and get it rectified, or ask them to revise the statement so that it doesn't come up as a notice to you, because it's going to be a bit of a task for you to reply online to the notices. You might need somebody, a tax expert, I'll say, to revert back to all the notices. Maybe a taxpayer himself or herself can also do this, but better to take a tax expert guidance on the notices part. If there is a reopening, of course, there is a big process. There are too many submissions that may follow. So most recommended, if there is a reopening, 147 section related notices, you should come in contact with the taxpayer. But if it is a 143 notice, you don't need to worry. You can handle it yourself. And if you see things are going out of the way, then you come in contact with the taxpayer or take the guidance of the taxpayer at least before submitting any response. Now, the difference, how do I get a notice? Right now, if your mobile number and email ID is updated on the portal, you get an intimation for each notice on email as well as on your mobile number. So all the postings are on real-time basis. Yes, you might get sometimes site glitches or site issues, but it will be resolved in a couple of days. This is our general experience in the last 2 or 3 months when we are filing responses to an assessment notices.
Got it, Meet. And you brought one very good point in between. Notice is being sent to email and phone number. The biggest problem is whenever we change our phone number, we update it in WhatsApp, Facebook, Twitter, and then Insta, but we never update it on the income tax portal. I think people should add this also into their list. Whenever they change their phone number or whenever they change their email ID, ideally they should go and update it in the income tax department too. I mean, in the income tax profile too. Otherwise, we might end up missing that notice. And by the time we realize that notice has been issued on our name, the thing would have become even more bigger and the interest would have increased. Probably it would have got into this scrutiny. Many things can happen. So that's a right thing which you brought in the right time, that we should actually keep our profile updated on the income tax department. Only then we will be aware of notices which are being sent. And I think we also did one webinar on notices exclusively in the last week or last before week, 2 weeks back approx. So you can also refer to that video if you are specifically interested about knowing the notices which are being sent by the income tax department, or if you already hold any notice in your hand, I think that's the best place to refer on how to reply and how to act upon it. Since we are discussing about notice, Margav, can I ask you a question? Like, since this webinar is mainly for individuals, what are the mistakes which usually people do? What kind of notices have you seen? What are the common mistakes? What are the common mistakes which people usually do while filing their income tax return, especially individuals?
Right. So, as Meet was pointing out, that one of the major mistakes which they are doing is the communication details which they are putting, the basic details. The communication details is the most important thing in the current scenario as compared to the earlier scenarios. What used to earlier happen was the person who was to, if you are hiring somebody to file the return, he used to put his number or his team member's number, and it never used to matter because all the notices were being issued from your local jurisdictional offices, and they used to come to your house and used to get the notices in hard copy at your place delivered. So you had all the communications receiving to you. But gone are the days. We live in a current age that every communication is being made online. So you get your emails, you get the notices through emails, you get any communication through your mobile numbers. So one of the major mistakes and major thing which everybody should ensure is the mobile number and the email address should be yours, which you are regularly checking. It should not be some email ID which you never bother to check. So that is one of the major mistakes which people are making, because people are not bothered as to which mobile number goes when you file the return. So the communication part is the biggest point you need to ensure now, because no physical notices are being served by the income tax department. Every process is happening online. So you need to ensure your mobile number and email address is most correctly reflected in the income tax return, because that is one of the ways through which you are communicating your current mobile number and the email address. Now that is one part. Secondly, what common mistakes which people make while filing the return is the selection of form is also one of the mistakes. Whether one should opt for filing of form 1, ITR 1, ITR 2, ITR 3, ITR 4. These are the 4 returns which an individual can select. Now, there are criteria which are specified already. And basis that, you have to opt for a form which covers your incomes. Like if you have income from salary and only interest income, you can opt for ITR 1. You have a presumptive income and you have other incomes and some salary income, you can opt for ITR 4. So ITR 1 and ITR 4 are the simplest of the forms which are available for the basics of the income. If your income is the basic one, you can opt for 1 and 4. ITR 2 and ITR 3 includes capital gains income. So this is something that happens. So if you select a wrong form, you might have to put in additional details and you would be wondering that as to why this information was required in the first place. But that is primarily because you selected a form which was maybe not applicable to you. So that is one part. Secondly, communications is majorly made through one of the IDs, that is do not reply @incometax.gov.in. You need to ensure that it doesn't hit your spam folders as well. It is very much possible that you are checking your normal emails, but then it has traveled to spam folder. So it should not happen. You should add it as a proper contact like income tax. There might be communications through it, and you will definitely not miss it. Plus, most of the times we see that savings bank interest income is something which is always missed. People always offer FD interest income. Since 194A TDS is deducted, it is reflected in Form 26 says you always offer salary income, but you always forget to offer interest income from savings bank account. It will not affect, in most of the cases, it won't affect your taxability because savings interest income up to 10,000 is exempt. So you just need to offer it. It's just for the purpose of information. You offer it under the head income from other sources. You claim deduction under 80 TTA up to the tune of 10,000. So this is something also which in most of the times we miss to show. So these are some of the common mistakes which people do. So we need to ensure that we don't do this mistakes while we file the return.
Yeah, I would add one more thing along to that, Marco. See, most of the times in individual returns, people are not e-verifying at the end. They are filing the return, but they are not doing their e-verification job and they are missing it. Even now, even income tax department also took one other step. Whenever, see, at the end of the filing, we need to validate the return or sign that return by using the Aadhaar OTP or by net banking or by sending a document, physical document by signing it in the or the post. But since that is a difficult part of the job, people will complete their entire return and will ignore that last part of it, last validation alone, because of which your return will not get processed. You will not be receiving the refund, or that return will not be considered as filed itself. So that's what is the another problem.
Exactly. So as Harsha has pointed out, that last part is not when you submit your return. Last part is when you e-verify it, or you sign it and send it to Bangalore. And that's when the process of filing of return gets completed. So this usually happens in a case where you are taking help of somebody who is having some knowledge of the income tax, who just knows how you file the return. And he might have told you that he has filed the return. It is just required to be e-verified. So that it is always recommended that whenever you file the return, you get it e-verified there and then, because something which is left, it always remains. And that return is not considered as filed by the income tax department. So you might be thinking that you have uploaded the data, it is submitted, but until and unless you e-verify it either through OTP, which is if your Aadhaar number is validated, you can do it through OTP. Secondly, as rightly pointed out, you can do it through internet banking. Thirdly, you can also verify it through your bank account. If your bank account is validated and your bank account number, the number which is there in the bank account, you can get an OTP on that number and you can validate it through that way. Fourth is you can use digital signature. You can even verify through that as well. And lastly, you can sign it and send it to Bangalore. But out of these 5 options, you have to mandatorily do one of the things to get your process completed. In the absence of that, the process is not completed and it will be deemed that you have not filed the return.
Got it, Marco. And if any audience, if they have any questions, please feel free to unmute yourself and ask it. Or if not, you can also ping it in our chat box. I'll take up that question and then put it before the speakers.
So there is one question which has come over here. It says that for income from business and profession, which form to be selected? Now here, I may just inform that there are 2 forms which can be used when you have income from business and profession. First is ITR 3, wherein you can offer your business income. Secondly is ITR 4. Now, how to choose between ITR 3 and ITR 4? ITR 3 comes into the, I'll first take ITR 4. ITR 4, you can choose it when, if you are opting for presumptive scheme of taxation. Now, to make things simple, to make less compliance, I mean, the burden of compliance should not be more. Government has introduced a presumptive scheme of taxation and it is there for quite some time. What can happen is you can offer only 8% of your gross receipts as income. And no questions will be asked if you are offering at least 8% or more. And if your turnover is up to 2 crores, you can opt for ITR 4 and you can offer that as a presumptive income and you can file it under ITR 4. But if there are specified businesses which can opt for it, there are some businesses which cannot opt for it. So if you are not opting for presumptive scheme of taxation, then you will have to go for ITR 3. If you go for ITR 3, you can offer your business income, but you will have to mandatorily prepare balance sheet and P&L. That will have to be filed along with filing of ITR 3, which in case of ITR 4 is not applicable. So that's why ITR 1 and 4, as I had initially mentioned, ITR 1 and ITR 4 are the simplest of the forms which can be filed. So if a presumptive scheme of taxation is opted for, definitely ITR 4 is an option. But if you're not opting for presumptive scheme of taxation, you go for ITR 3.
Got it. And one more question, which is from direct message from the audience. Startup India, is there no need of filing the income tax return when I register for Startup India and I am operating my business only for the past 3 years? So yeah, Bhargav or Meet, you wish to take this question. Yeah.
Meet, you want to take this up?
You can take it.
Okay. So as far as Startup India is concerned, it is government has introduced new section. The Startup India concept was brought in somewhere in the year 2017. And it's a special registration which you are supposed to take. And 3 years, you don't have to pay any taxes. Now, this is a deduction which the government has given. Deduction means that you need to offer your income and claim the deduction in continuous 3 years out of 10 years. Now, when you have to claim a particular deduction, you have to go and file the return. Filing of return is mandatory. Only when you file return, you can claim deduction 80 IAC. And by that way, you are taking the benefit of the startup thing that you had applied for. So it's not a case that once you are registered under Startup India, you don't have to file the return. No, there's no specific exemption. In fact, it is a deduction which is given to you. And that's why you have to comply. You have to file the return of income.
Got it, Madhav. And I would also like to add one more point over here. You will be eligible to claim deduction under Startup India only when you are recognized at the second stage of Startup India, because the initial certificate, I think mostly the audience over here who is questioning there is also asking about the first stage of registration, which is DIPP certification. But the second stage of registration is interministerial board certification. So to claim this benefit, whatever Bhargav has mentioned that you can claim the benefit under Section 80 IAC, that is a benefit which is available only for the startups which are recognized under the second stage. For all the startups who got general DIPP certificate, for them, this benefit, this specific tax holiday benefit is not applicable. Other benefits of Startup India are there that we can continue to avail, but this tax holiday benefit will not be applicable for them, that you can take note of. The reason is, like Bhargav was mentioning, the Startup India scheme, though it is announced some 2017, 2016, during that point of time, the number of startups which got recognized under this interministerial board, which means the number of startups who qualified the second stage of registration are hardly in hundreds. Some 300, 400 startups have been recognized in the entire country over past 5 to 6 years of time for the second level. So that way, I can safely assume for the person who asked this question or the people on this webinar, mostly your startup would not have been recognized at the second stage. So for that reason, you will not be eligible to claim that second benefit, but there are other benefits like angel tax benefit and all. And then there are, in general Startup India portal, you'll have networking benefit. Those benefits you can continue to avail, but not the tax holiday benefit under Startup India scheme. That is one thing. So I think we have discussed almost for 50 minutes.
There's just one more question that has come up. It states that if a person was a salaried employee for first 6 months and has become a freelancer or has done some business in the balance 6 months, how do you offer that income? So here, as I mentioned earlier, that ITR 1 comes into the picture when you only have salary income. ITR 3 and 4 is when you have business income. But ITR 4 also gives you the facility to offer your salary income as well. So if you are opting for a presumptive scheme of taxation, you can file ITR 4, wherein you can not only show your business income, but also your salary income, because ITR 4 allows you to do that. Similarly, you can also file ITR 3 if you are not opting for presumptive scheme of taxation, and you can offer your salary income in ITR 3 as well. So it can be either ITR 3 or ITR 4 when you are having salary income and business income. Because as you see, everybody now does some or the other freelancing job along with the salary income. So that's how you can either opt for ITR 3 or ITR 4, depending on whether you are opting for 44 AD or ADA.
Thank you, Marco. Before passing the conclusive remarks, probably I'll take a minute more and then I'll wait for any questions from any of the audience. And if there are no questions, I would like to thank thank both the speakers who are here, because I know it is a very peak time. We have 7 more days to complete all our pending income tax returns. Even in our office, we are working day in and day out. I'm sure like most of the chartered accountant offices in the country are under the same scenario now. So even during these tough times, you took out your time, you came out, and then like you helped our audience to understand the minimum mistakes which we commit while filing the ITR, what form to choose. This will be a very handy information at the last moment for sure, and this is very useful information too. If you have any doubts, we'll wait for a minute more. Otherwise, we'll close this webinar.
Asha, basis your conclusive speech, I thought at the end of the speech you will say that due dates have been extended.
Hopefully, even we are waiting for such good news, but hopefully it should happen. By seeing the data, mostly it looks like they might extend, but these days the finance ministry is also so strong at certain points. So, and like, since you brought about extension, even I would like to say one thing, like even if the due date is extended from September 30th to 31st December, or from July 31st to 31st December, Section 234A interest. You are right.
That's an interesting point. Everybody is under the presumption that due dates have been extended to 31st December for all the purposes. But there was just one small point which at the time of extension, department had stated that if your tax liability exceeds a particular limit, which is 1 lakh, then in that case, you will have to pay 234A interest. Now, most of the people have skipped this because most of the people were under the assumption that I don't have to file return in July. I'll get my taxes computed somewhere after Diwali, during the due dates, and that's how the whole scenario was. And then ultimately, when the computation comes up, you see 234A interest coming up, and then you are questioning, how can 234A interest come up? Because you are filing your return within the time limit. But here there was the catch. I mean, the notification was very clear. Notification had precisely stated that this extension will not apply for 234A. So any person who has paid the taxes before the due date, which is 31st July, then in that case, it's a different scenario. But otherwise, you have to pay 234A if your tax liability exceeds 1 lakh.
Yeah. So we cannot assume that due date has been extended for everybody. If there is a tax liability, go and clear it now immediately. I mean, there is nothing called clearing the liability, filing the return anymore, because we are left with only 7 days. So we would wish that everybody files the return over here. At least avoid the notices. Please take the professional assistance whenever you are. See, if it is a very simple return, you can file it on your own. But if not, even if there is a little bit of doubt, we would suggest take the professional assistance for sure. Otherwise, the cost of non-compliance is far higher than the cost of compliance. Probably for filing the return, you might end up spending some 500 rupees. But if you miss this return, or if you file a wrong return, for rectifying it or for representing before the officer, it is not just the money, you will also lose your patience, will also waste your valuable time and efforts too. So ideally, prevention is always better than the cure. So with
Oh,
these,
Harsha, just one point on what you added.
Yeah.
I would just like to state, take help of a friend who is a CA, but don't take help of a friend who assumes himself to be a CA.
Correct.
It's always better to get an advice from the right person instead of just getting advice from the person who is just merely filing those returns.
That is true. That is true. Yeah, people like
because the cost of correction is huge. Cost of non-compliance, as you rightly pointed out, is very huge. So it's always better to take the advice of the right person.
Correct. Yeah. People use this analogy, right? When you have some sort of a disease, you go to a doctor, but you don't go to a person who calls himself as a doctor. You go to a proper MBBS doctor. So always that analogy is highly relevant even for this profession too. So
certainly.
Yeah, please take help only from the proper professional and file your returns in an accurate manner. Avoid the notices. And moreover, the returns are being processed with a rocket speed now. Almost 60% of the returns which are filed are already processed and the refund has been issued. So this is the right time for you also to file your income tax returns. And if there is any refund applicable, you can claim it. Please don't trust the professionals who are charging the fees based on the percentage of refund, etc. They are not professional. You will realize that particular mistake maybe 1 year or 2 years down the line. By the time your hands are already burnt. So please get proper professional assistance when you file your income tax return. Thank you. Thank you very much. Thanks for joining the webinar and staying till now with patience. Thank you.